What's going on, traders? It's Lucas here from the Commitment of Traders Club, also now known as Commitment FX. And if you've clicked on this video, then you are looking for the easiest Forex strategy that will make you a winner in the Forex market. And let me tell you, I have got that lined up for you. So without further ado, meet me over on the charts in a few moments and we will get straight into this video. Let's get it done. Okay, traders, so we're over on the charts. We're looking at Aussie dollar, US dollar on a back testing strategy. Now let's get some home truths down. If you're looking for the strategy which will tell you exactly where to enter, exactly where to exit, and you haven't got to do any work, then this isn't the video for you, unfortunately. But my strategy gets pretty damn close to doing that for you guys. And this is the easiest, simplest, and most effective strategy out there, which will turn your pips into profit. And that is called simplicity tied in with the Commitment of Traders reports. Now, for those of you who don't know what the Commitment of Traders reports are, they are the weekly reports published by the banks and institutions which tell you whether they have their long positions opened or short positions opened. And it is as simple as that. Now, as we know, they are the ones who move money in this market. And if we can understand whether the banks are buying or selling a particular currency, then we can be on the right side of the market more often than not. And that is my strategy. Forget losing, forget your EMAs. This is where the money is at. Now, over on the Commitment of Traders Club, I will leave a link down below for you. You can have access to the clearest and cleanest Commitment of Traders reports, which give you access to the data, not just from the current week, over the previous weeks. And I'll get into my strategy now to show you the effect of this and why you should be a part of it. So if we're looking on Aussie dollar, US dollar, what can we see? We can see that the market has been moving sideways and has become very choppy. Now, as a new trader or beginner trader, this may be quite daunting for you. You don't know whether it's going up, you don't know whether it's going down, and you may have been told that the trend is your friend and you want to get into a trending market. Well, that's all good. We won't be trading at this point. So if we were looking at this pair, we wouldn't know exactly where to start. But that's where the Commitment of Traders reports come in. So we're looking at the 2nd of June, roughly, 2nd to the 9th of June. So if we go over on the Commitment of Traders reports and we want to look at Australian dollar, because that is what we are trading here. And if we go down to the beginning of June, we'll forget obviously the top part of the chart, that's irrelevant. So the beginning of June, we can see that over the past few weeks, institutions have gone from having plus 2.5, plus 3K positions in favor of buying this currency pair to now having a large amount of positions shorting this pair. We can see that it's gone from 3K to minus 9K positions to the downside. And on the left, the change along clearly tells us that the banks and institutions who publish this report have closed out minus 2K here, minus 1K here, minus 7K here as well around the 8th of June, their position to the long side, and have subsequently opened positions to the short side. Now, what does that tell us? That tells us that at some point in this choppy market, there's going to be a trend to the downside. And if you do not believe that that is magic, let me show you the power of it. It doesn't get any simpler than this. So on a basic price action valuation, we can clearly see that the price has formed a lower low down here. It has moved up, but is moving sideways. So we know now that the market is going to move to the downside. We just don't know when it's going to happen. Now that's where keeping your chart simple comes into play. By keeping it simple, you'll clearly be able to identify when that move is happening. So by being patient, we'll see how the market plays out, and I'll show you when to enter this trade. Okay, so now we've seen that the price has currently broken below the previous low on this sideways movement. Our Commitment of Traders reports are coming into play. We know they've closed out their longs, we know they're opening their shorts, and now price is reflecting this. So let's continue. And there we have it. We have now broken out of this sideways movement and broken past the previous low of this chart movement. Now, what we want to do as competent traders is enter on the retest of this break. And it is very simple. We're looking at the daily chart. This works on any chart movement as long as you can identify what you're looking for. It works perfectly on the 4-hour, but on this occasion we're looking at on the daily. Now what we want to do is we want to wait for that price to retest this area. Okay, here is our retest. We're now looking at the 24th of June. So if we go back over onto our chart, 22nd of June, again, we've had that confirmation the past few weeks that now, when we looked at this pair, we expected this push to the downside. We've now gone from having minus 9K positions to minus 17K positions to the downside. Now, don't be fooled by this number here, this change in the long. They've opened an equal amount of long positions as they have short positions. And all that simply is them taking their profits from this bullish movement here, or closing out here and taking their profits from the bearish movement, which then causes price to come for this retest. And that's why they've also opened an equal amount of positions to the downside, because this pair is going to continue in the direction that we anticipated. So if we were about to take this trade, we'd be looking at our commitment of traders reports, seeing that price has now continued to push downwards on the chart, and the banks and institutions are also shorting this pair. Perfect, we can't go wrong. So our first confluence area is the banks are on the side that we want to be on. And the second point in which we want to enter is at the major level of resistance. So we had previous support, which is now turning resistance. So what do? We simply put in a short position order at this retest. Our stop loss, we are looking at on the daily, so we can have a relatively tight stop loss in this instance. We want to have it a little bit above the previous high of the wick, and again a nice 1 to 3 at least. We'll keep it as a 1 to 3. Okay, so what else can we see on this chart? We can see here that there's been a nice wick rejection on the daily time frame. And if we go down onto the 4-hour briefly, we can see again here on this 4-hour chart that price is rejecting this area. There is 100% guarantee that this is going to the downside. So we've placed our order, we've got our stop loss, and now we just wait and see how the market plays out. And there we have it. We have hit our target in a week or so. We've obviously had a nice 1 to 3 on the daily with a take profit of 140 pips. Now, I did get quite close up here. Perhaps I should have had my stop loss a little bit higher, or alternatively have my entry a little bit higher to calculate for that price movement. But that's okay. We kept it broad enough to allow the market to breathe. The biggest mistake that retail traders do is they think, I'm a pro at this game. I'm going to sniper this entry. I'm going to get a 1 to 8. And what happens? You get stopped out in the first candle, going the other way, for then price to plummet in your direction and for you to see that money slipping away out of your hands. That is the worst feeling in the world. I'll tell you that for free. So by keeping your stop loss at a reasonable level, and I say reasonable because we don't want it too tight, but again, we don't want it massively high that we don't get that 1 to 3. So by keeping it at a reasonable level, we have a good chance that if price does hit into our drawdown, that this is just simple price movement and it's going to continue to the downside. The benefit of understanding the commitment of traders reports, using a stop loss as well, is we know that price is going to go in our direction. We just can't pinpoint exactly when. So if you do have a wider stop loss, we know it's at this major level, so it is going to take effect, but the price may find resistance here. It will try to push to the upside, and we want that stop loss large enough so that if it does have some wiggle or some movement, that we don't get stopped out, which in my case, on this example, was perfect. We had some wiggle room, and then price pushed to the downside. You'll notice on my chart, I don't have any moving average indicators, although I do have them available. There are a few indicators that I do use, however, and if you join the Commitment of Traders Club, you'll get access to my trading plan, which will assist you, no doubt, in your own, as well as other educational benefits and access to the Commitment of Traders reports. Now, for transparency reasons, they are available online as well. You can go to the cftc.gov website, which shows you the Commitment of Traders reports, that they are free for everyone, but you do not get that benefit of having a look over the duration of the period. So you do not get the benefit of seeing how price changes over time. You only see it that week by week, which is utterly useless. So if you are interested in becoming a member and unlocking the power of the Commitment of Traders data, I'll leave a link to the website below. We look forward to seeing you if you do decide. To refresh, keep your chart simple, traders. Understand what price is doing. And the most important thing which I can give you is be patient. You'll notice I didn't enter a trade up here to the short side, although I could have. But we want to get that confirmation that price has broken through structure, found the retest, so we enter on the pullback for it then to continue to the downside. And as we'll see, it continues even further. But our 1 to 3, we're satisfied with that. So traders, I hope you found this super easy strategy, super easy to understand. If not, leave me a comment below. I'm happy to explain further, and I'm happy to do another video on this topic. It's nice to see you all on my channel. Thank you for helping us grow. Let's see if we can hit 10 likes on this video, and I'll see you guys in the comments for any questions. See you guys on the next one. Goodbye.